It's hard to know when economists are split as to where we're at with peak inflation, where monetary policy is going to head from here, and the lingering impact of the pandemic and the war in Ukraine. But how should investors be positioning?
Well, the first thing I would say is there is still a lot of uncertainty out there. And many of the things that you just mentioned are unlikely to be resolved in the very short term. So our view is that you want to be a little bit more cautious in this environment and really diversify your bets. So we've been a lot less focused on the directional trade and much more focused on the relative value trade.
Gold is one of your picks, and interesting, we have seen this correlation between the dollar and gold. Does that concern you, particularly with these calls that potentially we're seeing overbought territory for the dollar, and how that could potentially then playing into the next leg for gold?
Well, one of the most important reasons why we have gold in the portfolio is it's one of the few diversifiers. As you noted earlier, we've seen interest rates backing up here pretty dramatically. And so when you have an environment where the equity outlook is uncertain and we're having rising bond prices, you're just not going to get that diversification benefit or that protection from fixed income. And so you have to look at other places. And gold has continued to demonstrate value as a diversifier against the economic uncertainty.
Lori, let me just turn to China because we are getting the latest cut on China's 2022 GDP growth forecast by Nomura. They're now expecting the economy to grow 3.9% from 4.3%, of course, very much away from their 5.5% growth goal from Beijing. And they're really not the only bank, right? We've been seeing UBS, Barclays, Standard Chartered all cutting their growth forecast. What does that mean in the market side of things when you position, when at the same time we are expecting some more support, fiscal and monetary, coming from Beijing?
Yeah, China is a little bit delicate right now. Obviously, the lockdowns have damaged it pretty considerably, and we've trimmed our growth. And on the back of trimming China growth, we think that that hurts the emerging markets complex more broadly. And so we've actually been quite underweight to emerging markets equities in particular. The other side of it, as you note, though, is that China does have tools at its disposal. And assuming they can get past some of these more draconian lockdown situations, you could see a pretty sharp rebound. And we saw that before. So don't count China out, but it's likely to be a bit more lumpy over the coming months.
And how will that translate to the rest of, as you said, emerging markets that you've been a little bit more cautious about when you also factor in the fact that commodities prices are surging because of the war in Ukraine and other uncertainties?
Yeah, emerging markets are kind of a mixed bag right now. So certainly you've got the concerns about China, and that's putting some pressure on the broader emerging markets complex, which, as you know, has a very large allocation to China in it. The other thing that you've got is still the COVID is much more dramatic in many of these emerging economies where vaccination rates are still lagging, or where there isn't the same kind of health system that you have in some of the Western economies. But as it relates to oil, there are winners and losers there. So there are certain countries within the emerging complex that are oil producers, and they've been benefiting. But on balance, we think the risk is too high in emerging markets, and we prefer to take our equity exposure in the U.S.
Lori, what about Japan? I'm fascinated with the market dynamics right now, given the weakness in the Japanese yen, but the BOJ continuing to come in with buying operations. Where does that position Japanese equities? Some had said that perhaps there's potential because they're pretty cheap compared to other parts of the world.
Well, they may be cheap, but again, some of that uncertainty related to China and Asia Pacific region more generally is going to weigh on Japan as well. And then when you think about some of the supply shocks that we're seeing, some of the Japanese manufacturing sector is being harmed by that as well. And then when you layer in the currency weakness on top of that, it's just hard to get excited about Japan generally. There are some good companies there, but we're not overweighting the region.